Hey guys, it's Yao here again. Sorry for such a long delay to the third video of this series. It has been a busy time for me the past month. Last time we talked about probabilistic analysis. We mentioned that we need to time our entry using technical analysis to make best use of stop losses. So this is what we are going to do in this video. So what is technical analysis? Technical analysis is the analysis based on price and volume data. The idea is that all sort of information is already embedded into asset prices. Therefore, it is possible to extract and predict future price movement this way. This is the tool that you will need so that you can roughly know when to buy and when to sell. However, they don't always work, and that is why you need to have appropriate stop losses. And without further ado, let's get into the technical indicators that I like to use. Okay, so here are the top three technical indicators that I like to use. They are RSI, Keltner channel, and trend lines. Other technical indicators that I use are MACD, MFI, OBV, and more. In this video, I will only go through RSI, Keltner channel, and trend line. Let's use our previous example in the second video, ADS, and I'm going to use crystal ball to search for ADS. Then I'm going to scroll down and click on technical indicators. Technical charts for ADS. And this will bring us to Stockchart, a great web application for technical analysis. In this chart, we will be able to see the RSI here, and this is the stock price as a candlestick plot, and then you also have the MACD down here. So let's begin and talk about RSI. The RSI is categorized as a strength or weakness indicator, and when it is high, it means that there is a lot of buying momentum, and when it's low, it means that there's a lot of selling momentum. So when do we consider RSI as high? Personally, I consider RSI as high when it's above 60. And if it's above 75, so when it's above 70, it goes into the green region, and when it goes to 75, it's usually considered as too high, or better known as overbought. Sooner or later, it would reverse, but it might take some time to reverse back down. And if it's below 30, then it's considered to be too low, or better known as oversold, and the expectation is sooner or later it would go back up. I do want to point out that even if you buy it at 25 RSI, the prices may still drop in the next 1 month or next 2 months. So you need to be able to set your stop losses appropriately, because it's not 100% guarantee that it's going to go all the way back up like here, right? So you see that it's below the RSI the RSI indicates oversold, but then it just keeps on dropping downwards. So I do want to point out that there are some asset classes that even though you see that the RSI is low, it could be at 25, it could still keep on being in that region for a long time. Those are the type of asset that you don't want to do even a short-term trade just because you want to make some money from the low RSI, and oil is actually one of them. So if you search for USO, you will see that probably roughly 2 months ago, there was a huge rate region down here. But let's get back to ADS. So for ADS, we know that the current RSI is at 30.75. And I personally use crystal ball to do a quick check to make sure that the RSI may indicate a reversal might be coming soon. So let's go to crystal ball to check if that's the case. And notice that because of the downtrend here, I will be keeping my trading horizon to be short, and by short, you know, I'll probably keep it to be from 1 day to 5 days. So for the worst case, let's consider 5 Ks, right? So I'm going to click on the indicators for the 5 days, or these are the probabilities for the 5 days, and I'm going to look for RSI. So if we buy it like end of today, or if we are able to buy it at 179.01, then 5 days later, based on the RSI around 30.75, the probability of being higher than that price is around 57.76%. Okay, so this is slightly better than using no indicator at all. So just using the current value of the RSI doesn't give me enough confidence that a reversal might happen. So let's move on and talk about Keltner channel. So first of all, you want to enable Keltner channel on the chart. You do this by going to overlays, click on this none thing here, and then click on Keltner channel. Let's make the chart slightly larger. Alright, so we are now in business. You'll see green lines appearing right now. So the middle guy here is the middle Keltner channel. Okay, this dash green line here is the middle Keltner channel. The lower solid green line is known as the lower Keltner channel, whereas the upper solid green line is known as the, obviously, upper Keltner channel. The lower Keltner channel can be seen as a support line, where prices have a good chance of rebounding when it hits this green line or go below it, right? The upper Keltner channel conversely can be seen as a resistance line. It simply means that it is a line that indicates that prices might start falling after hitting or going beyond this line, like a few cases here. The problem is usually when does it start reversing? We don't quite know that, right? And that's why we need a stop loss. Okay, so one interesting thing about the middle Keltner channel is that it can act as either a support or a resistance depending on the trend that it's moving. So if it's moving upwards, it acts as a support, and if it's moving downwards, it acts as a resistance line. So obviously here, when the middle Keltner channel is trending upwards and the prices falls from the upper Keltner channel down to the middle Keltner channel, the middle Keltner channel acts as a first defense and pushes the prices back upwards. Otherwise, it might bounce somewhere near the lower Keltner channel. Otherwise, it might bounce like this guy, all the way down to the lower Keltner channel and then do a rebound. The same goes for the case when the middle Keltner channel is trending downwards, right? Like this, like recently here. When prices bounces from the lower Keltner channel, like here, bounce from the lower Keltner channel, the middle Keltner channel becomes a resistance. As the price moves closer towards the middle Keltner channel, it has a good chance of falling back down like this, and like this guy goes beyond a little and drops back down. So let's take a look at the current situation for ADS based on the Keltner channel. Currently, the price is below the lower Keltner channel. Typically, this means that a bounce is coming soon. So let's check the probability for the lower Keltner channel. Okay. So we go to crystal ball, scroll down a little, and you will find the price to lower Keltner channel around 0.99, this just simply means that how far is the price away from the lower Keltner channel. So it's around 99% of the lower Keltner channel. The current price is around 99% of the lower Keltner channel, and this implies that there is roughly 64% chance of closing higher 5 days later than the price of $179. Okay, so that's pretty good, right? So let's see what is the combined probability when we use the RSI, the lower Keltner channel, and the downwards middle Keltner trend. So here you have the RSI, the lower Keltner channel, and the middle Keltner slope decreasing. And the probability shown here is around 59.4%, which is actually lower than the lower Keltner channel probability, right? The reason for this is probably because the RSI is not low enough, and so at this type of situation where I see the lower Keltner channel itself being a strong support, but yet when I combine things together, I'm actually not really getting a really good, I'm not getting a better probability. It starts to concern me a little, but at the same time, I don't really want to lose the opportunity of making this trade, right? So what I'll do next is to take a look at the trend lines and see if the trend line offer any form of support, so that I could be a little bit more confident going into this trade and hopefully being able to make some money and not being bounced out from my stop loss, right? Please note that I'm not asking you to buy this stock based on this analysis. This video is really just for educational purposes, and I think that's all I want to cover for lower Keltner channel, and I'll begin talking about the trendline support and resistance analysis. So usually what happens is that the previous support and resistance usually form a straight line. It can be either horizontal or it could be a straight line with slopes. So for ADS, the straight line with slopes is pretty obvious. You can see that roughly speaking, there is some form of support near this trend line here. Every time it hits this straight line, it bounces back up. Every time it hits this straight line, it bounces back up. So hopefully, now that it hits this straight line, it's going to bounce back up in the next few days. And the same holds true for the resistance line here. Okay. So let's talk about horizontal, because now that I look at this straight line here, it gives me a little bit more confidence that the prices might be setting itself up for a bounce within the next 5 days. So let's close this guy, right? And let's take a look at the horizontal support, horizontal line support. So what I do is I click on bar, set it to 1, and this will compress the bars so that I can look over a longer time span. So just now I was looking at probably 6 months of price movement. So now I'm looking at roughly 2.5 years probably, or close to 2.5 years, maybe not completely 2.5 years. So let's draw a horizontal straight line at 179. Okay, so by drawing these two horizontal lines, I can see that There's another potential support around 179 based on this previous support here. So previously there was some support around 179. So hopefully this previous support is going to give some guidance to somebody else and they're going to buy it at 179 as well. Otherwise, the next support is going to be at 173 or 174 here. Okay. You probably won't be able to see the price here, but trust me, this is roughly around 173 or 174. Okay, doing all of this analysis give me reasonable confidence to say that probably I have a good 70% chance that prices will start rebounding at 179. So I can say that I'm going to initiate a trade at 179. Then I want to determine when am I going to sell it, and I'm going to sell it most likely at around near the middle Keltner channel. Remember that the middle Keltner channel now is acting as a resistance, so I'm going to sell at probably 193. The middle Keltner channel is near 195. I'm picking something lower. I want to be a bit more conservative, so I'm going to sell at 193. So to summarize, I'm going to buy at 179.01 and I'm going to sell at 193. The next step is to determine when to cut my losses if things doesn't work out, and I'll use crystal ball watch list to help me determine my stop loss. If you have not watched my second video in this series, you should check it out. That's the video where I talk about calculating stop losses based on average return, and that average return is returned by crystal ball. In this video, I'm going to calculate my stop loss based on technical analysis, which would be better for short-term trade. So let's move on and let's start calculating our stop loss. So let's try to calculate our stop loss. I'm going to go back to crystal ball, go back to the summary page, and I'm going to click on the watch list button. I'm going to put in a time frame of 5 days. Remember, this is a short-term trade because of the downwards trend, right? And I'm opening a long position, meaning that I'm buying the stock. You can also choose short if you are shorting the stock. Shorting simply means that you are profiting from the stock if the stock goes down. Now I'm going to put my starting price at 179.01, and then I'm going to put my end price at 139. These numbers were obtained from our previous technical analysis, and this shows me my return percentage down here as soon as I enter both of these numbers. Now I'm going to put in my safety factor as 3. You should put in some number between 2 and 5. You know, the higher it is, the more likely you will get kicked out by volatility. So you have to be careful with your safety factor. Okay, so just to briefly explain what this safety factor of 3 means, it basically means that I can fail 3 times, but I will only need 1 success to make back all my losses. And this is how you try to manage risk. This is where the risk management comes in. And you note that as soon as I put the safety factor in, this form calculates the maximum loss percentage that I should be bearing, and it also tells me at what price point should I stop my losses. So this is pretty helpful, at least for me. The final step is to put in the position size. I'm going to put in $5,000 here, and again it would automatically calculate how much you can make and how much you can lose on this portion of the form. So you can also fine-tune this a little bit more. For example, maybe you only want to lose $50. Then you can size your position smaller, say maybe to $2,000. This will help you manage your loss amount, and correspondingly you also make less money. Okay, so I'm going to add this stock into my watch list, and let's go to the watch list. So in the bottom you see ADS appearing here. I can then use this number and enter it into my brokerage apps so that I can send out a limit order. Once the order is filled, I'll set a stop loss of 174.57, or I can update this to reflect my actual the actual price that I bought the stock at, so that the stop loss is automatically updated later on. So that's how I usually put in a trade these days to manage my risk. And it's great for the volatile environment. To summarize this video, I have introduced the 3 types of technical indicators that I use to determine when to buy and when to sell. I hope that you have learned some of the important techniques from this video. If you like this video, please give it a thumbs up, and I'll see you in my last video of this series, and it is on fundamental analysis. So good luck, and I'll see you next time.